All right. Yo and hello. Hey guys, this is Niaz back again with a quick short video, hopefully about the market where it's at right now. I'm just gonna hit up on SPX basically. Um, and so basically kind of hit up, what's been happening lately. I'm not gonna take that much time. I'm not actually trading that much this week, which is why I haven't been doing any kind of updates and things of that nature. Um, but it's kind of one of those interesting times um, where it's like some of the way that the market's been moving, it is uh, like what you would expect in a bear market. Uh, however, bear market does have its strong like upward markets, upward trends. So something I'm just gonna touch up on what I had said before is that whenever last week, end of last week or the last few days of last week, I was just saying that, for example, that it kind of called when it started to turn bullish after Powell's um, rate hike, right? And so since then, the market kind of tanked for a day or two. Let's take all these drawing magic off my chart here. All right. So you can see that it was on the 15th, I believe, right? So the 15th market tanked, and usually after the rate hike, there's a short but really fast, tr bounce. Now, one of the interesting part about this time around was obvious rate hike of 75 basis points or three quarter of a point. And so that's exactly what the market expected, and my expectation was the market will kind of bounce up, and that's kind of what it did. I mean, it's not the most perfect bounce, right? Technically speaking, I don't want to necessarily go into why, but the charts themselves, I mean, the bars themselves, you can see it's um, especially at the bottom, it was a like a bounce, um, kind of like a retracement from in a bear market, right? Normal stuff. Now, I thought one of the funny things is that I did mention that the way that the market was behaving at the end of last week, even though it was a successful week, or at least kind of I was able to catch the direction or the main like vibe of the market right. It's very hard or tough to make like any kind of strong like speculation. You have to wait for like a signal up or down. And the reason was because at the end of the week, the market was really hanging around here, right? Again, all my charts here, like basically intraday, um, and also, day on the daily. So I'm gonna take this off. So, so what happened is that you need to have a signal to the upside or downside for you to get in. However, again, the post hike and with Powell saying, he stands by the rate hikes, essentially what it caused is kind of gave the market a positive boost to stick by his word and, kind of stick by what the market expected, and the market kind of went up. Um, Partially, I also believe there's quite a bit of um, short covering happening. And this is also why in a market like this, see, on Friday, since the market went up so hard, it's generally speaking, if this happened on Monday, right, we have the whole rest of the week for this to play out, right? This momentum take it higher. If it's a Friday, right, the momentum gets cut short because well, people go home, right, for 2 days, and then over the weekend something happens, and then on like we got to build like a new momentum. Now, what's interesting about the market going down is there hasn't been any kind of necessarily bad news, and the way the market just went down is if you look at it, right, almost like a straight, like, it just kept on hitting the 39.28 or so and just kept on moving down. And so this was interesting because it's kind of it doesn't tend to like be able to break through anything when the market does move. It doesn't tend to like follow through, right? And this is again where it's showing that there's a lot of resistance, right? Even though the up move, it's not like it's able to do so with strong momentum. It does shoot up like last Friday, um, and but at the same time though, look at like it was like bouncing around here for how long? Like 3 days straight, right? Over here a whole day straight, like on Friday, Monday, and then broke today. Okay. So what's so essentially it's not like a consistent pattern, which means that it's not acting like it's in a bear market. It's so like consolidates for a long time, shoots up, then consolidates again, then shoots back down again, right? It's not like kind of like a stair step pattern. There's a long consolidation, so it really has to fight its way upward. So that's not to say though that um, uh, it's not going to go higher. It's just that the way it behaves, it's not behaving like it's in a, let's say, a bull market. Okay, and another way you can kind of get a feel for it based on news is that if you have bad news coming in, right? You have good news coming in, right? Let's say market goes up on good news, it doesn't have that much follow through, right? Um, and what it does is that it tends to kind of return back or like kind of get rejected at a certain level and then goes back. And on neutral news, it tends to go down in a bear market. Vice versa, in a bull market, it tends to go up because that's the path of least resistance. That's what the momentum is. And also, generally speaking, there are more surprises, and all the surprises are in a bear market to the downside, and usually surprises in a bull market to the upside, right? So these kind of things are still kind of like moving the market right now. And so whenever you have these kinds of like um, consolidation, right? You want to see a break one with or the other, as you can see here. And these levels always kind of stay important, right? They're always in the background. Now, um, one thing that's kind of interesting looking at this chart is that you have kind of almost like the beginning open of what is that? This is I believe Monday, right? Yeah, Monday, and at the end of uh, Tuesday, it's like almost the same, right? Furthermore, if you go back and as the levels we were looking, remember we were looking at 3838 as a important level, uh, right, right there, right? From this high, quite a few days ago on the 15th. In fact, that's the um, um, Powell's rate hike on that day, right? It broke through. This is on the hourly, by the way. I'm gonna switch it to minute. And then the next one up was 3900, and this was the gap. Okay. And if you look at it, the market knew exactly kind of like, well, not exactly, but the market was definitely kind of looking at that as the market it has shot up through start opened the day at 3822 um, on what is it, Friday? No, on Monday, sorry. Hold on. No, no, that was Friday, 24th. My bad, I'm sorry. It started to kind of peter out as it ended up going to like 39, right? It did go up, but it's more like a consolidation pattern. As you can see, there's a lot of overlapping, like bars. And then when the bar stacked, and it was a big move down, right? The early hours of Tuesday. But it was still continuing. So what could be the cause of it? The cause of it is if you think like Tuesday didn't have any big news, so it's like one of those things, it, this is like a bear market kind of a dynamic, pricing dynamic. One and two is this is my estimation that market everyone's waiting for uh, what what's Powell's going to say. Um, a lot important numbers are coming out for this week, and I think that a lot of people are just waiting for it and see where the shoe falls. You have GDP numbers coming out. You have um, the regular mortgage numbers are going to be coming out, but PCE numbers are coming out quarterly for first, which we kind of know. It's final, right? Final numbers, but we kind of know the estimate already, so it shouldn't be that much of a surprise. Consumer spendings are coming out quarter to quarter for Q1, so a lot of these numbers are coming out, right? So that's going to be something that is getting priced in, or the expectation, or the anxiety for that is getting priced in. You have personal income numbers are coming out, so a lot of important numbers are coming out this week, and I think this is essentially the expectation that maybe the numbers that we'll be receiving, getting, are going to be worse than expected. For example, for the Q1 GDP was supposed to be like we were going to be down like 1%, even like a few weeks ago, but now it's like 1.5%. That's the consensus, basically, the forecast. So we have to see what's going to happen. So the thing is that in this kind of market, unless you have kind of a game plan, ideally you don't want to do anything, right? I mean, you don't want to make a move, and if you do make a move, you have to make a quick move, right? So let's see on the daily. The daily is again kind of interesting because I'm gonna take all these again magic markers off my chart. Again, you can see, right? Most of the action, I mean, it did break through up to the upside above the high of which is 39.10 on Friday, and it didn't do anything. It kind of came back, got rejected. Again, this 3900 ends up being kind of like the top zone, so to speak, pivot zone. If it does break through, it has become an important level, right? On the 1 minute now. Like really, most of the action has been about like 39, 24, and then on yesterday, Monday, it broke up and then quickly came back up again, back down again, right? From 39.14 to 39.42. Okay, so the thing is, this level over here got hit, 39.20, and seemingly that is an important level, and we need to see if this breaks, if it holds or not. I This chart doesn't look that good, on like in a bullish case or so. If this kind of at the end of it, it kind of starts to kind of consolidate, then hallelujah. Um, and you can see that the consolidation is kind of, it's kind of like slowing down on the way down. This is 1 minute chart, right? And so let me take how long has it been? Holy crap, it's 15, 13 minutes. Gotta. All right, so again, I'm not really trading this week, so I'm not really following it, but it's kind of like a lot of the things that I saw in the market before, especially last week. It seems like they're kind of bearing out. It was a bull call, but the bull, as went up like quite a bit, really, from what was it? Uh, the lows of 36.70. That's like, so that was low was not 36.70. It was 36.36, right? From that point on to 39, or almost 39.40, or whatever the high was. It's a pretty sizable move. So you would expect some of it to go down. And before Friday, the move up, there was fairly good, solid, bars moving up. Um, it's not like the most, how should I say, organized move up, but it's there was still good momentum as it moved up, and it hasn't broken through yet. This level seems to be an important level now, the 38.20. So if it does break through, there's this gap, and which would be roughly around that 3800 or so. This is both highs for the 22nd and 23rd. If it does keep on breaking down, it might break down there. If it does move up, um, the really strong downward uh, momentum here. It does move up, then we're definitely looking up. One, right, 38.49, 38.67. This is they're not that impressive, but this is essentially again the top of the ranges where it gets like really strong resistance, right? This consolidation at the top for 2 days, or so it's and also with the Powell speech today, which is Wednesday, and all the numbers coming out of Powell's, I think it was the speech was going to be on 8 o'clock, I believe, right? Yeah, 8 o'clock. So all these things have the potential of moving the market. So this is something we got to be aware of. And you can see that the overseas market are not acting well at all. Um, you know, cruise kind of down. The futures are not telling you much. And gold is totally useless. But what you got to look is the dollar. Slightly up or holding steady. You have most of the foreign markets are down, right? Again, not the most not the most good sign. One thing is that there seems this is something uh, the bond market is kind of holding steady. So this is something that might be a scenario where the market is kind of firming up, right? The dollar is not moving much. So in other words, people are not really cycling out of it. So in the morning, market just might just hold steady uh, as long as people are not again cycling out of it, right? Because other asset classes, people are still holding on to it. They haven't moved anywhere, so to speak. So yeah, I'll leave it at that. Let's see what E-mini is doing. Uh, 38.26 again. It's kind of holding at that zone. Man, it's been yeah, okay. It's kind of like caught in a sideways market. 1 minute. This is not a tick chart, so yeah. So yeah, let's see what happens in the morning tomorrow. I don't necessarily have a bias right now. It's just again, it's a bear market. In my this is what I said before. The market needs to prove itself before out of a bear market. So this is kind of normal stuff in terms of you see um up mark, like uh, corrections or correction to the upside, and consolidations and counter trend rally. These things happen real fast. So this is kind of normal, right? Um, Also, is there at this point? Yeah, not exactly. So if we have a channel right here, actually, yeah, there's a channel there. Um, it might take some time for the market to kind of hit that channel. Let's put on, uh, this video went quite a bit longer than I thought it would. Let's see. Oh, nice. So it's converging, on the 1 hour, right? 1 minute. It's definitely trending down on the SPX, and also again the 50 and the 150 is definitely kind of trending real close by. The dollar, like we went over. Let's see. So definitely strong bear market, action. You can see the price difference. The differential between the moving averages of 150 and the where the market is. So, yeah. Um, yeah, I'll leave it at that for now. Um, yeah, I kind of just looked over the market. I haven't really done that many kind of that much research on anything or seen what has been moving the market. This today, I didn't find anything that is like might be responsible for it. Um, Foreign market is definitely something to look at, like Chinese market. So anyway, guys, holy smokes, it's been 20 minutes. Um, I yeah, I hope to see you guys and pretty soon. And one thing though is there should be some kind of a, generally speaking, and some kind of a retracement that is not like these like quick and fast retracement, but more like a um, kind of a consistent, retracement in a bull bear market, right? Um, that's more sustained. We haven't really seen that, and we need to see that to find out, uh, given the distance, the differential between the 150 and the price of SPX, current price, I think at some point we should see something like that. We kind of do. If we do that, it'll be a great time to kind of like sell out again or sell some positions. But outside of that, intraday, these are great times to trade. Friday was a great day last week for me, and Monday was a great day. So, I took the week off, just relaxed, barbecued over the weekend. So, getting some errands done. But outside that, I'll see you guys later whenever, do more content and update in the market. Uh, all right. Ciao.